Madam Chair. Oh, Madam Chair, you are live.
Okay, at 5:04 p.m., I am calling to order the Finance Committee for Monday, June 10th. And if we could get a roll call vote, please.
Certainly, Madam Chair. Councillor Cassett.
Here.
Councillor Lindell. Councillor Faulkner.
Here.
Councillor Lee Garcia.
Here.
Chair Romero Worth.
Here.
Madam Chair, you have a quorum.
Terrific. We are on to approval of the agenda. Do we have changes tonight to our agenda?
No changes from staff.
Any changes from the committee? And if not, is there a motion?
Move to approve.
A motion and a second to approve the agenda. All those in favor, aye.
Aye.
Anybody opposed? That motion passes. Next on the agenda is the consent agenda. I believe there were 2 items pulled. Am I correct, Director Oster?
Yes, that is correct. Items E and item J.
Okay. Anything else the committee wanted to pull tonight? And there are no other changes, correct?
Correct, Madam
Okay.
Chair.
Is there a motion on the consent agenda as amended?
So moved.
Second.
The only problem is so moved to approve.
Yes, so move to approve the consent agenda as amended.
There we go.
Second.
And is there discussion? You're okay? Okay, on before we vote? Okay. Councilor Lindell.
Well, I mean, we can vote, but my point is that we're gonna have a discussion item on the audit.
Yes.
We only have 2 items that are pulled. They're both essentially the same item, same topic item. And we have staff here, and maybe we could do those first prior to the presentation so that they could go home.
Yeah, but we also have a consultant here. So it's sort of half of one, 6 of the other.
Make it quick.
And the other thing is we already approved the agenda. So if you want to move it around, we have to approve this consent agenda as amended, and then you have to make a motion to amend the agenda.
Okay.
So let's vote on the motion that's on the table, which is to approve the consent agenda as amended. If there's no further discussion, all those in favor, aye.
Aye.
Anybody opposed? That motion passes. So now, Counselor, if you want to amend the agenda.
Thank you, Chair. I would like to make a motion to amend the agenda to hear items E and J prior to our audit presentation.
Is there a second?
Second.
We have a motion and a second to amend the agenda to hear the 2 consent items that have been pulled, E and J, prior to the fiscal year 2023 audit report. Is there any discussion on that motion? And if not, I think, do we have to do a roll call or can we just? I think we can just.
Madam Chair, I think we can do a voice.
All right. All those in favor, aye.
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 Anybody opposed? That motion passes. All right, so we are going to move to the consent agenda and we'll take up the first item, item E, request for approval of amendment number 1 to general services contract item number 23-0097 with Santa Fe curb appeal to increase the not to exceed amount by $3 million for a new total amount of $3.5 million, including New Mexico gross receipts tax, and to extend the term to June 30th, 2027 for on-call citywide landscaping services. And tonight, I believe we have 2 people in the audience to help with this. And Director, or I'm sorry, you're not a director, Counselor Lindell, you pulled this item.
Thank you. I'm not qualified to be a director. I'll make this quick. My concern with this is, Mr. Burnett, we already have a contract with Santa Fe Curb Appeal and also with Franco Trees and Landscaping. If it's all right with you, Chair, I'm going to ask these questions covering both items because they're essentially the same question. We don't need to go to the second.
Right,
We will, but
we will
be
in order
quick.
to approve it, but it is item J if for folks following along.
So, Mr. Burnett, my concern, on this contract with Santa Fe Curb Appeal, we have a current contract with them, correct?
Chairperson, Counselor Lindell, you're correct.
How much do we have on that contract right now? Approximately.
Chairperson Romero Worth, Counselor Lindell, I believe at the moment, all three landscaping contracts are at $1 million. And these, just for a little context, and so everybody understands fully what these are on-call contracts. They currently, at the outset, they don't have any actual finances tied to them. They're on call. So as needs arise, anybody throughout the city can come to the facilities division and request to use one of these. We would open a PO specific to that work, which would be paid out of the particular department's funding and would begin drawing down that initial $1 million amount.
So there's already $1 million sitting there. How long has that been there?
Chairperson Romero Worth, Counselor Lindell, I believe we are entering the second year of these contracts' existence. So we can extend for a total of 4 years. We're doing an amendment for 3 years. So that would tell me they've been in existence for 1 year. I apologize. I don't know 100%, but
That's all right.
Yeah.
That's all right. My point is this. I have a couple of points. I'm not comfortable extending this contract up to $3.5 million when we have had the contract and we haven't drawn down on it. I think it's too much money to have sitting in an on-call contract that we haven't even done on call with in the last three or 1 year. 1 year. So we've done nothing. The other concern that I have with this is when I look at page, I don't know, I think it's 32 of 34 on this. It's either 32 of 34 or 32 of 35, particularly with Santa Fe Curb Appeal. I'm dumbfounded at the cost per for example, my computer's jumping all over here. Hand mowing from Santa Fe Curb Appeal is $130 an hour, whereas Cassidy's is $35 an hour. Of $135 per hour for hand mowing, I think that is a usury cost to us, and that I think it's highly unfair to whoever is doing that mowing, because I'll bet they're getting $15 an hour, and it makes me really, really uncomfortable to pass that. So what I'm asking is, when we do these on call, who oversees what company gets called? Because I don't ever want to see Santa Fe Curb Appeal hand mowing.
Chairperson Romero Worth, Counselor Lindell, it's a great point, and thank you for asking the question. The direct answer to that question is when somebody comes to the facilities division and says, hey, I have X, Y, or Z landscaping need. One of our project managers, like Mr. Schwartz here, gets assigned to assist that department. And he kind of works through that with them through developing a scope and then selecting a vendor. For context, when we do an invitation to bid for an on-call contract like this, we will often award to multiple vendors. They respond to what's known as a bid tab, which is a list of services, and they each provide their individual pricing for those different services. we like to award multiple contracts in this situation for a variety of reasons. One, it helps us prevent bottlenecking when it comes to getting services provided. And two, you'll notice when you compare the bid tabs, Curb Appeal has an insanely high mowing price that we would never use. They conversely are very competitive when it comes to hourly wage rates. And so there's always the opportunity for us to have multiple contracts and take advantage of what is most efficient or economical with one vendor in comparison to another. And I guess the final point is, please remember that whenever these contracts are used, somebody from my division or myself is always vetting the work and always ensuring we use, the best priced and most efficient vendor for the work, and prevent taking advantage or using those kind of anomalous prices like the mowing on that particular bid tab.
Yeah, thank you, Mr. Burnett. I really appreciate that because Santa Fe Curb Appeal bid amounts on those first like 5 items, the first 3 items are really, really high comparatively. And, you probably mowed lawns when you were a kid for $2 to $3 an hour, and $130 an hour is crazy.
Yeah.
So,
Chairperson Romero Worth and Councilor Lindell, we actually did some investigation into this. And one thing that because we're using Curb Appeal's name, what they did respond to us, we asked some questions about this. This is the first time this company, it's a newer company. It's the first time they've responded to an ITB, and the owner was very embarrassed. And he said, I didn't understand. Excuse me, I didn't understand what I was doing, and I bid an entire crew rather than one individual. And he was, I kind of feel bad for him understanding how he got here. But just so everybody in the room knows, I think it was a genuine mistake on their part, and not, while it prevents us from using them for mowing, I think it was done, an innocent mistake more than malice.
I'm really glad to hear that because I always think, well, I don't think the city should pay more than what I'm willing to pay at my very own home, and that's not happening at my house. So second question. Do we really need to increase this contract by $3 million to have what would be at this point in time, like $4 million sitting there? Is that necessary?
Chairperson Romero Worth, Councilor Lindell, I don't think so. We get into the habit. There was a time when the preference in the purchasing department was that we did contracts on an annual basis, and we would come back and extend the term and increase the compensation. And I think, it's easy for us to fall into the mimicking the same pattern. We increase the compensation when we increase the term. Purchasing has kind of changed how they allow us to do things, and are letting us create contracts or amend them to the full term. But you made a good point at the beginning that we haven't used a considerable amount of the compensation already on these contracts. And I could see there being it being justifiable that we only increased the term and not the compensation. And if it made you counselors more comfortable, I think we'd be fine going back and revisiting these amendments to only extend the term and pulling back that compensation. Should the time come when we need to increase one or the other contracts, we could always come back for another amendment at that time.
Thank you for clarifying that, Mr. Burnett. What would we have to do in order to pass this, where we do increase the time frame on the contract, but we don't add $3 million to it? Can you speak to that, Ms. Oster?
Certainly, Madam Chair and Councilor Lindell. The proposed contract amendment does both. It increases the term and the compensation. I think if the will of the governing body was to only increase the term, we would need to revise the amendment and bring it back to you for approval. I think the document itself would have to be changed. So I don't think there's a way for you to approve it in parts like that.
I'll yield for,
Yeah, can I ask a couple questions on this?
go ahead.
So why did the dollar amount get increased?
Chairperson Romero Worth, to be quite honest, I think it's because our standard process for the last year or two has been to do these on-call contracts in 1 year. Well, let me start at the beginning. How we think of on-call contracts when we conceive of them is landscaping, since that's what we're doing. We'll use that as the example. We think to ourselves, we'd like to get a 4-year landscaping on-call contract. And based on our past expenditures, we think doing about $1 million a year or a $4 million contract is what makes the most sense to us. So we will, there's different ways we can go about doing it. In this case, we did an ITB. We had 3 respondents. We saw the value in each of the 3 respondents' bid tabs where some outcompete, they outcompeted each other in one area or another. And then as we go through the actual contracting process, because the ITB said 4 years, $1 million per year, we kind of fall into this pattern of we set each contract up for 1 year at $1 million. And then there's just that standard process. We come back every year, we extend the term, we extend the compensation, and we don't pay a lot of attention to how much we've spent because it's all kind of set up conceptually at the onset or when we issue the ITB. And so we're a little bit of victims of our, kind of our own process here and not taking a moment to think in more detail about whether or not it makes sense to do one or the other.
And what
that
is
makes-
ITB stands for what?
Oh, I apologize. An ITB is an invitation to bid, and it's the counterpart to a request for proposals. The RFP, request for proposal, is a qualitative based solicitation where they're responding to more to things more related to how they perform and the type of work they do. The ITB, on the other hand, is quantity based and is based strictly on dollar amounts and doesn't take into consideration past work or how they work. And so qualitative versus quantitative.
So in essence, I'm not sure, let me try this. So we're extending the contract out for another June 30th, 2027. So another 3 years. And essentially because it's 3 years and it's $1 million a year, you're adding $1 million for each year.
Chairperson Romero Worth, correct.
And if we haven't spent, so let's say we didn't increase the amount at all and we have $1 million there, if we haven't spent it in this year, it's still there in the subsequent years, correct?
Correct.
And I guess what's interesting about this is that I raised a similar question, I think, with the shopping cart contract, where I was concerned about how much money we were putting into the contract. And everybody said, oh, don't worry, it's okay, because you'll come back and approve something else down the line for the actual expenditure. So it's okay if the contract has a bigger amount than we may utilize. So I don't know if, and Director Oster, you may remember that conversation at governing body. I don't know what's different here. Isn't this similar?
Madam Chair and members of the Finance Committee. So with these on-call contracts, we don't establish a purchase order for the full amount when the contracts are approved, because we don't know how much we're actually going to need from these contracts. So with most contracts, we require the budget to be available for the full amount, and we establish a purchase order for the full amount. But with these on-call contracts, they're designed to help us deal with unexpected needs. So we don't know exactly how much we're going to expend. And we try to make sure that the dollar amount available on these on-call contracts is sufficient to cover unexpected emergencies, which, we have
Right.
no idea how much they're going to cost. So, Madam Chair, the budget has to be available to fund any purchase order that would be established off of an on-call contract. And so the Finance Committee and the governing body reviews and approves the operating budget. And then if there are budget adjustments proposed, so for example, if there wasn't enough budget available through the operating budget to fund a purchase order that we wanted to enter into off of one of these on-call contracts, then we would need to bring a budget adjustment forward. And if it were over $60,000, it would come through governing body for review and approval of that budget adjustment. So Madam Chair, I think that's what they were referring to with these on-call contracts. We estimate the maximum amount that we think we might need in order to avoid having to do multiple amendments to the contract. But when we enter into these contracts or when we do these amendments, we don't know exactly what our needs are going to be, particularly going out into 2 or 3 future fiscal years. So Madam Chair, I would say that if the budget wasn't sufficient, if the budget that had been approved by the governing body wasn't sufficient to cover the need, we would bring forward a budget adjustment request through governing body, and that's when you would approve an increase.
Yeah, and so it seems to me that like having the contract be being what's the right word? Having more money there is not necessarily a bad thing, because you don't want, I mean, if you're in a pinch and you need mowing services and you need to come to us and for the purchase order or the budget approval, you don't, it seems like you want to have the contract authority, because that's one more thing you would have to do. So, I mean, aiming high on these isn't, it doesn't feel to me like it's a problem in essence, or a, we're not committing to this money. We're just giving ourselves the ability to pull it down should we need it. And if we don't need it, it's not tying any money up. It's just a contract saying we are agreeing that we are estimating, I guess, that we might need this level and we might not. But it's not tying up our budget. It's not committing us to spend. It's not, so I guess I'm not sure that I have an issue.
With all due respect, Chair,
Yeah.
what's the difference between this issue and the one we had on the shopping carts?
Right. Well, and I mean, it's sort of like my credit card, right? So I have a credit card that says my credit limit is whatever it is, $10,000, $5,000, $2,000, whatever my credit card limit is. And that doesn't mean I'm going to spend $2,000, but it means I have that ability to spend should I need to. It's kind of the same thing, isn't
I
it?
voted against that.
I know.
Council, this is the same kind of thing for me. I think it's too much money to have committed to these contracts.
But we're not really committing. We're not committing it really.
It can be spent.
Well, only when they come back around with either a purchase order or with a budget request to spend it. And then, because that's what I got told with the shopping carts is, I didn't like the level of the shopping cart contract either, but I was assured that, it's going to come back through. And if we start getting up towards that upper reach, then, maybe
Well, here's a question. So if we didn't approve this and we've already got $1 million sitting, if that gets drawn down to 100,000, then we can come back and look for
Yeah.
adding more money to the contract. I mean, I realize that we're adding this in now just in case, but I'm a little uncomfortable with that amount of money with these three contracts being committed to this type of work.
But that's just it. I don't think we're committed because we're not saying we're going to spend 4 million, but we have that credit limit available if we need it. And I think, I don't know, can somebody speak to what it takes to bring something like this through? I mean, it's not a fast process, right? So if you were to run up against your credit limit or your contract limit, you might not be able to pull the service down to do the landscaping that's required in a timely way. And then the public gets mad because the weeds are overgrown.
Chairperson Romero Worth, the average amount of time right now that it takes us to do an amendment to a contract, going through, all the steps, which you probably don't want me to lay out here, but probably takes somewhere between like 6 and 8 weeks to process an amendment.
Okay, it's cumbersome. And you're right, I don't want you to go through the steps. All I want to know is it's not simple. It doesn't sound like it's simple.
It is not.
All right, I'm gonna go if it's so, are you, Counselor Cassett wanted to jump in here, but I'm happy to go back to you, Counselor Lindell. What would you rather?
Let Counselor Cassidy.
All right, Counselor Cassett.
Thank you, Madam Chair and Counselor Lindell. If I recall correctly, the difference, I believe, with the shopping cart conversation was the program and or policy change that we are hoping to achieve with that, as opposed to this, which is ongoing maintenance, and that was almost a motivator for us to get on that and not let it lie. So I think that was, if I'm recalling that conversation correctly, I think that was the difference, where that we almost wanted a cumbersome process to both motivate us and staff to really take a hard look at how we are approaching shopping carts. I would agree with Councilor Romero that I would prefer the longer contracts with a higher amount allowed, because this is not what I would like you to spend your time doing. If there is an alternative, and I know it does, not just impact your hours, but also, some of your team in finance and purchasing and legal. So again, with the understanding that the money is not sitting locked away in a box, that if there is a budget adjustment that is needed, that would still be coming through to us. But this does allow the utilization that would go through you to make sure that we are utilizing the contract as fiscally responsibly as possible. Then I would prefer the longer contract, because I don't believe we are looking at a policy or programming change at this moment in time, as opposed to shopping carts where we need to do an overhaul there. Am I remembering everything correctly according to everybody else?
Well, if I can, because I don't want to put Director Burnett on the spot here. The problem is that we did approve the contract for that full amount because I wanted to lower it, and we did approve the full amount. So it didn't motivate us. It's not but what's motivating us is that hopefully we won't spend the full amount, but I wanted to bring the credit limit or the contract amount down so that we wouldn't even have it there, so that we would, but
yes, that was the conversation. Is he supposed to come back to us in a year to report?
well,
We
I think we are looking for a policy change, which
Yeah.
is why I was arguing, why are we doing a contract of this size? But I lost that battle. So, but that's fine. I mean, but this is similar. And
Thank you for the clarification. I will yield the floor.
Counselor Lindell.
Thank you, Chair. Thank you, Mr. Burnett, for being here. We have some different opinions on this. It's as long as you're there overseeing things, for me, this isn't a crucial issue. That's, that's part of it. So yeah, let's move along. I can live with this and, but the point's been made that, we need to be judicious about these contracts. And, thankfully, Mr. Burnett, you're here to oversee this. And, that's, I'm gonna let it go. Thank you.
Okay, do we have a motion? Oh, we don't have a motion on this yet, right? Yes, yes.
Chairperson Romero Worth and Counselor Lindell, just real quick, I think the message was well received by me. And I just to reassure all of you, as we work through on-call contracts going forward, we'll pay a lot more attention to compensation and term and do our best to find a really balanced approach. And, thank you for the point and point well taken. And thank you for the feedback.
Okay, do we have a motion, further comment, further discussion, other questions? Where you want to go here?
Move to approve.
Second.
All right, we have a motion and a second to approve item E. Further discussion, and if not, we get a roll call, please.
Counselor Cassett,
Yes.
Counselor Lindell,
Yes.
Counselor Faulkner,
Yes.
Counselor Garcia,
Yes.
Chair Romero Worth.
Yes.
Motion passes.
All right, we are on to item J, which is similar, correct? The conversation is the same?
Yeah, move to approve.
All right,
Second.
so hold on just a second. Let's just read it in and then request for approval of amendment number 1 to general services contract item number 23-0096 with Franco's Trees and Landscaping LLC to increase the not to exceed amount by $3 million for a new total of $3,500,000, including NMGRT, and to extend the term to June 30th, 2027 for an on-call citywide landscaping services. And now I'll take a motion.
Move to approve.
Second. A motion and a second to approve this item. If we could get a roll call, please.
Certainly, Counselor Cassett,
Yes.
Counselor Lindell,
Yes.
Counselor Faulkner,
Yes.
Counselor Garcia,
Yes.
Chair Romero Worth.
Yes.
Motion passes.
Thank you for being here tonight.
Thank you.
Okay, we are back to our presentation item and I want to, so this is the fiscal year 2023 audit report. And we have, of course, Director Oster with us tonight, but then also AJ Bowers with Carr Riggs Ingram, CPAs and advisors. And we don't have Eric here tonight, right? No. Okay. And of course, everybody knows Carr Riggs Ingram is the external auditor for the city of Santa Fe. This is the FY 2023 audit. And thank you, Mr. Bowers, for your patience with our schedule change. Appreciate it. And I will turn it over to you and Director Oster to handle this however you want to do it. So thank you. Welcome.
Now it's on. Thank you all for having me. Chairwoman Romero Worth, members of the committee. As she said, my name is AJ Bowers. I'm a partner with Carr Riggs, and we'll go over the 2023 audit. You should have a copy of it in front of you. If you have questions, just go ahead and stop me. Let me know. So what we're gonna, sorry. Just, okay. What we'll cover today, just
Make sure you really talk into the mic. We can hear you in the chambers, but anybody who watches this now or later on YouTube, they can't hear you unless you're into the mic. And this is a topic, of course, with a lot of interest. So want to make sure they hear what you're saying. Thank you.
not a problem. So for the agenda itself, what we'll cover today, we'll cover the timeline, we'll cover the scope of work and the auditor's reports, just to kind of let you know where everything is, what was the, I guess, the opinions themselves, what the findings were, where to find them, the levels, et cetera. And then any sort of questions you have, and of course, pause and stop if needed. So when we talk about the timeline, so this is the 2023 audit. So this is the last one to get caught up at this point. So that's a good thing. So when we look at the timeline itself, it was pretty short, right? So we started here at the beginning of this year. So the planning time frame was January through March. the field work really February through May of this year. The exit conference was held on May 14th. The independent auditors report, so it's dated May 15th. So that's the date of the reports and everything else. And then it was submitted to the state auditor's office on May 16th. They did their review process. They went through the okay to print and they released it June 3rd. So it would have been released last week. So we appreciate their timeliness and the speed in which the state auditor is moving in order to get those out. So here we are today, providing the presentation for the committee. When we talk about the scope of work, as I said, it's the June 30, 2023 audit, right? So we're 11 and a half months past that date right now. So we're looking at that year. So we also conducted a single audit. So as part of the financial statement audit, and this is the document itself, as part of the financial statement audit, we also conduct an audit for major federal programs, and that's considered, that's called a single audit. So we tested 3 major federal programs: the Airport Improvement Program, the Community Development block grants, the entitlement grants, and then the COVID-19, the coronavirus state and local recovery funds. So when we rendered opinions on those, we'll talk about those in a moment. In addition to the single audit and the audit of the financial statements, what the numbers look like, we also conduct an audit that deals with the compliance with the New Mexico state audit rule. So we do look at the items that the state audit rule requires us to look at and incorporate that as part of our work for that fiscal year. So when we look at the reports themselves, there's 3 reports in the financial statement. So the first report is an independent auditor's report. So this is over those financial statements. It's really an opinion on the financials. It's on pages 10 through 13 of the financial statement. And so it basically says, can the numbers be relied upon to a reasonable number? Okay. And so that opinion is an unmodified opinion. So that's the best opinion that's available. What it means is that we were able to obtain sufficient appropriate audit evidence in all material respects over the numbers, the balances, the transactions of the city of Santa Fe. Okay. So that's kind of that first piece that we look at, like I said, the highest opinion that's available. And so when we look at what we call audit support for the different numbers, we've got hard numbers, we've got soft numbers. That's the way that I like to term them. Hard number would be something like cash. We can go and confirm cash with the bank. So we have some sort of tangible item that we know physically is there, and we can confirm that with them. And a soft number would be something like an estimate, useful lives of depreciation, lease information, pension information. There's estimates that go into those numbers themselves. And the city has policies and procedures, and there's, technical guidance and everything that goes along with those. And so we evaluate those policies, procedures against the industry standards to determine, are those numbers considered reasonable? And that's what we were able to determine. So there was no area where we couldn't form those opinions. And so we were able to audit that. So good job. That's of course what we're here for. That's the first piece that we want to look at. The second piece that's in the financial statements, and this is the independent auditor's report over internal controls and compliance in accordance with government auditing standards. So every audit conducted under the New Mexico state audit rule is conducted under these standards. Okay, so these require us as part of our audit to consider internal controls as part of the planning, and also to report anything that we find to you in that report. So the report itself is what we call negative assurance. Okay, so that's standard. What it means is we don't test internal controls in order to render an opinion about the I would say the operations themselves, but anything that we find, we would report to you. So it says, these are items we found, others may exist that we did not identify. And it'll explain the purpose of that control testing in order to be able to plan the audit and execute it accordingly. So as part of that audit itself, the amounts of findings, and so the report itself is under pages 200 and 201. And then it'll list out what those findings are that relate to government auditing standards. So there's 4 financial statement findings. And so we'll go over those here in a moment, but the 3 of those are material weaknesses, and 1 of them is a material non-compliance. And so I'll go over the definitions really quickly again as it relates to government auditing standards. Material weakness that's the highest level. It says if something goes wrong here, it could materially affect the financials. It could materially affect the financial statements of the city. So it's that highest level. The next level down is a significant deficiency. Okay. We did not note any in this audit. for the significant deficiencies, but that is, the definition is doesn't rise to the level of material, yet still merits the attention of the governing body. So it could be a policy, it could be a procedure, it could be funding, it could be so many things that the governing body might need to be involved in order to allocate resources. We didn't have any of those this year that we noted. And then one, material non-compliance. So that's if you don't comply with a grant or debt covenant or something in a material way, it can show up there. And so we did have one of those, and we'll talk about that. That finding is the same one in the single audit as well. It just gets reported in both places, and we'll talk about that in a moment. In addition, in the state of New Mexico, we have what we would call state audit rule findings. So because we have a zero materiality threshold, we report everything that we find to you that comes up as part of the audit. So there are 2 other matters and 4 other non-compliance. And so the definition of those other matters would be a finding that doesn't rise to the level of a significant deficiency. And then 4 other non-compliance is non-compliance that doesn't rise to the level of material. Okay, so that's what's reported in there. All of the findings and the responses and all the recommendations are all in the schedule of findings and question costs on pages 212 through 236. That has all of the details of all of the findings in there. We'll go over the different titles, where you find them, et cetera, here in a moment, but that's where they're all going to sit. The third report in the financial statement is the independent auditor's report on compliance for the major federal programs under in compliance under the uniform guidance. So this is that single audit. So as I mentioned, we tested those 3 major federal programs as related to the Airport Improvement Grant, the CDBG grant, and the COVID-19. So we render an opinion on those. We test controls around the compliance, and we test all the different direct and material compliance requirements that are applicable to those grants. The CDBG and the COVID-19 were both unmodified opinions, which means that we were able to obtain sufficient appropriate audit evidence. We didn't note any non-compliance that relates to those grants. Okay. The Airport Improvement Program, we had a qualified opinion. So what that means is there was one area, which was around some allowable costs that had some non-compliance material to that grant. So in all the other areas of that grant, it was unmodified opinion, but in that area, it was a qualification of the opinion. And so that is labeled in the findings, and we'll go over that in a moment where you can find that. So 2 unmodified opinions, 1 a qualified opinion, just so you have the history of what we've looked at, because we do a risk assessment every year when it relates to the different major federal programs. We don't test the same ones all the time. Airport Improvement has been audited the last 3 years, 21, 22, and 23. CDBG, that was not audited in 21 or 22. So this was a new grant to be picked up in the current year. There were no findings noted over that, that program itself. And the COVID-19 was not audited in 22, but was in 21. Okay, no findings noted there. As I mentioned, the Airport Improvement Program, I did pass over. There were 4 material weakness findings of our internal controls this year as it relates to that program. Okay, so, and one of those was that material non-compliance. The report for the uniform guidance, 202 to 205, and then the schedule of findings and question costs that relate specifically to federal grants is 219 to 226. So you'll see where those are at. So what we'll do now is just kind of go over the reporting summary themselves. So this is just going to be able to lay out what the findings are, where they're found, and just a little bit of the background information for you, so that you can discern which is which. So when we start here, when you look at a finding, this will say FS findings. This relates to the financial statements. The numbers there, the 2023-001, 2023-002, that is the finding number in the current year. So it's by fiscal year is the first 4 digits, and then the last 3 is the finding number within the year. In the parentheses, if there's parentheses, it's a repeat finding, and it has the original finding number in there. So this finding, the first one, is a repeat. It was the 7th finding in 2019. So this is repeated for multiple years. It's the schedule of expenditures of federal awards and internal controls over grant reporting. And then in the parentheses at the end, it says MW for material weakness. So this is a material weakness finding. It's located on pages 213 and 214. There's no questions, or if you have questions.
So are you gonna go through, are we gonna do the management response too, or you're just gonna present what you saw? I can't remember how we've done this in the past, Director Oster.
Madam Chair and members of the Finance Committee, in the past, we've kept it pretty high level. We can certainly discuss the management responses to the findings if you'd like.
What's the pleasure of the committee?
Are we going to see this as a governing body as well?
I mean, this is the same presentation that will be a governing body as well, yes. I mean, we could, if, maybe, and just heard a murmur here on the dais, maybe if they're of a particular level, would be good to give a management response. I don't know where we draw the line. is the problem. Yes, Counselor Faulkner.
I would want to know what the manager's response is if something's been going on for a long time, like this first one. And then for me, it would just be anything that was significant. Otherwise, I think some of these things are minor things, probably.
Yeah, except they're gonna sound like they're more than they are, and there are a couple of them that are not, yeah.
Madam Chair?
Yes, Counselor Cassidy.
We do have the report that does have the manager's response. I think that the biggest reason to actually talk about them would be for the benefit of the public. And the public is going to be watching more on governing body than today. So I would be okay with not going over them today because we have the report and have had the opportunity to go over them. But I would imagine on Wednesday, that would be a little bit more of an interest. But of course, that's not our decision right now, but those are my thoughts.
Yeah, and I guess I would argue the opposite. I'd rather do it here. When we have a little bit more time than at governing body when we have a whole night. And so, all right, maybe we can just quickly, I mean, I don't think we need, let's just, if you can be fairly succinct I don't think you need to read verbatim. They are all here in the packet. If people are interested in a particular area, they can read the full paragraph, but maybe you can just give a synopsis, Director Oster, of the management spots. I hope, and I think you're familiar, we're not putting you on the spot here. I think you're familiar enough with this that you should be able to give us a response at a high level.
Certainly, Madam Chair, happy to go over it. So the nature of this first finding is that the city has struggled in the past to provide an accurate schedule of expenditures of federal awards, which is one of the schedules that the auditors audit as part of their federal single audit. And the reason for that links to the way that information is tracked within the Munis system and identifying information in the general ledger in Munis by federal grant. So as a result, in prior years, the finance department has had to provide multiple versions of the schedule of expenditures of federal awards to the auditors after the audit has started. So we have shown improvement. In FY21, we had 7 or 8. In FY22, we had 3 or 4. And this year for FY23, we had 2 different versions of the schedule of expenditures. The way that we are correcting this is by implementing additional functionality in the Munis system, Grants Master and Project Ledger functionality that will link to the general ledger and will allow us to track these federal expenditures at the level of detail that we need to in order to prepare one accurate version of the CFA for the auditors to do their work on. We are recruiting for the grants manager position. While that position is in recruitment, we are developing cross-training and documenting procedures. We are working with our consultant, Clifton Larson Allen. We had a 4-hour grants training in April that was provided by Clifton Larson Allen to over 50 city employees. So we are working on developing our knowledge throughout city government, both within finance and in our programmatic departments that use these federal grant proceeds to ensure that we're maintaining the documentation that we need to prepare the CFA timely and accurately with only one version in the future.
Perfect. Thank you so much. And then the second finding is for the year is the internal controls over financial close and reporting. Again, this is a repeat from 2017. It is also a material weakness finding. It is listed on pages 215 and 216. I'll let Emily chime in on that one.
Thank you, AJ, and thank you, counselors. This is something that we've talked about a lot during my time here at the city. This is our monthly and year-end close process. So basically, the situation here is that we did not have a adequate control over our financial reporting, and in order to achieve that, we needed to implement a month-end and a year-end close process. This really started out due to lack of positions being filled. And we have successfully filled a number of key positions, including our controller and our accounting officer, who are overseeing our close process. We did implement a monthly close in FY 23, as well as a more robust year-end close process in FY 23 that's continued into FY 24. Now, because we were behind on audits, we were not able to close FY 23 timely. However, now that we're moving into a more normal cycle for FY 24, we are optimistic that we'll be able to close FY 24 timely. So we have made progress on this position, and we are continuing to develop our month-end and year-end processes to make them more robust.
Thank you so much. Finding number 3 in the year is again a repeat from 2020. It's a controls over cash balances, which is also a material weakness, pages 217 and 218. I'll let Emily chime on that one.
Thank you, AJ. This is another one that we've talked about quite a bit regarding cash reconciliation and our controls over the cash information being reported in Munis and that tying out to what's reported at the bank. This is another one where we're working with ITT to implement additional Munis functionality, the Treasury Management module, which will help us automate our reconciliation process. In FY 23, we did have manual reconciliation, and this is an area where we leverage Clifton Larson Allen, our consultants, quite a bit because it's manual and it's a lot of work. As we move forward, we are continuing to use Clifton Larson in FY 24 to assist us with the manual work involved with reconciliation. And we are also working towards the implementation of that automated functionality in Munis that will allow us to have the system match things up for us and identify discrepancies so that the human effort is involved with researching and resolving the discrepancies rather than performing the matching part of the reconciliation process.
So that'll conclude the 3 that were material weaknesses as it relates to the financial statements themselves. The next findings here, they're federal findings. So it'll state that right there for you. And these all 4 will relate to the airport improvement program themselves. So the first one here is related to the allowable activities over payroll. And it's on pages 219 and 320. This is a material weakness and the material noncompliance. And so ultimately what happened here, and I'll let Emily elaborate on it, is there was some items that had been requested a secondary time. And so there was a reimbursement as a question cost of about 89, going off the top of my head now, about $85,000 to $90,000. There was a question cost that was found.
Thank you, AJ. Yes, this is the most serious finding in the report, and this is what led to the qualified opinion on the airport improvement program for the federal single audit. And I agree with AJ. What happened here was that payroll expenditures were duplicated in a reimbursement request, and we ended up requesting a reimbursement for about $86,000 more than we should have from the federal government. We will work with the federal government to address that and reimburse them for that expenditure. And the finance department is working with the airport program to beef up our controls over the reimbursement request process and bring in a specialized consultant to assist with federal compliance and perform additional reviews and oversights to ensure that this type of issue doesn't repeat. I do want to note that the current airport manager, James Harris, did not join the city team until about 5 months into FY23. So, this was his first year with the airport, and he was working through many different issues with the airport. So I think we're well positioned to work together with finance and airport in a manner similar to what's happened with the CDBG program to really beef up our federal compliance efforts and be able to meet the compliance requirements in the future.
And I just want to add, we did not overpay anybody. We just overbilled the federal, let's rephrase. We overbilled the federal government, but we did not overpay any of our employees.
Madam Chair, that is correct. What happened was that we used 2 different reports that were combined. The employees were only paid once, but some employees showed up on both reports, and that resulted in the expenditures being picked up twice for the federal drawdown request.
Thank you.
The next finding in there is also related to payroll items for the airport improvement program. So it has the exact same title. It's just not a material non-compliance, and it's around the controls related to the timesheets themselves that relate to that. Emily?
Thanks, CJ. So this one is payroll approval. And this is something that we've discussed before. We had a similar finding in FY22. It wasn't specific to airport improvement, but this is something that the city manager's office has been working with the finance department and really all leaders within city government to ensure that managers and supervisors and city staff are entering and approving timesheets in accordance with our schedule before we issue payroll checks. So, Madam Chair, our corrective action is to continue those efforts to communicate with managers and supervisors and employees about the importance of maintaining accurate records related to payroll, the importance of those approvals happening according to the prescribed schedule. We will provide additional training. We are working on an update of the Kronos timekeeping system. And one of the areas where we hope to be able to offer additional flexibility is with regard to having backup approvers for timesheets. In the current version of Kronos, which is quite old, we don't have the ability to designate backup approvers easily. So that is something that we hope to implement as part of the new Dimensions timekeeping system. And then also in our management response, we mentioned the federal compliance support to airports specifically to help them develop their policies and procedures and processes related to federal compliance.
This next one here is also a new material weakness finding related to the airport improvement program, and it's related to the equipment and real property management compliance requirement for the airport. 223, 224 in the report.
Thanks, AJ. Now, this is an area that Mr. Harris identified early on when he joined the city again in November of 2022, which is about halfway through FY23. He has hired a heavy equipment mechanic, and that position is responsible for tracking, maintaining, and repairing airport equipment, in addition to maintaining logbooks. With June 30th coming up in a couple of weeks, we actually just had a meeting earlier today where we talked about the importance of ensuring that the year-end inventory is accurate and that we're identifying assets that were purchased with federal funds separately from those that were purchased with city funds. So I think there's been quite a bit of corrective action done in this area, and I'm optimistic that our year-end inventory for FY24 will be able to meet all of the federal requirements.
And then lastly, on this next page will be the last federal award finding, also related to the airport improvement program. This is financial reporting. This is another material weakness. This one is a repeat from 2021. So it's been repeating the last couple of years. I'll let Emily chime in real quick.
Thanks, AJ. Okay, and this is the last material weakness finding as well, in the report. So the issue here was that we did not maintain appropriate supporting documentation for our federal financial reports. So the solution here really is to work with staff, provide training, and ensure that everyone understands what kind of documentation is required to support those federal financial reports. This is an area where a compliance vendor will help us as well to increase our knowledge of what's required under the federal awards, provide training to staff, and develop standard operating procedures related to document requirements and document retention. Madam Chair, I will flag here that the next findings in the report are the state auditor compliance findings, and these are the ones that are required to be reported under the state law rather than under the auditing standards. So these are more kind of less serious findings, I guess. I'll let AJ, talk about that, but the ones that we've covered up to now are the material weakness, which is the most serious type of finding. The rest of the findings are the other matters and other non-compliance, which are less serious.
Yes, thank you, Emily. So yes, as Emily said, these next few findings are the state audit rule ones, right? And so in audit world, government auditing standards, we report those first level to you in the report. And then what would normally happen outside of, say, New Mexico or a few other areas is these would come in a whole separate report, or maybe not, maybe be verbal or something else. So it just depends on how they get communicated. They would normally be communicated, but not necessarily within the report themselves. So as Emily said, they are what we would consider less severe. Doesn't mean it's not something that occurs. Doesn't mean that it's not important. It's just from a severity and a level of involvement from the governing body. There's not normally as much, there's not as many resources required for those. So the findings that we have here repeat from 2021 related to the pledge collateral. And this is an other non-compliance. So that's on page 227. The next one would be the state audit rule finding 2023-009. It's a repeated from 2020, and that is a budgetary non-compliance. And so again, those are both other non-compliance on those respective pages. This following finding here, it's cash appropriations in excess of available cash balance. That's another non-compliance. That's another budgetary process that is repeated from 2021. Then there's a new finding for the controls over vendor information. That's considered an other matter, and that's 2023-00011. That's on page 232. And then this last two pages, or last two findings here, state audit rule finding 2023-12 is a repeat from the prior year of 2022. And it's the bank account authorized signers would be considered an other matter. And then last is the late audit report finding. Since of course it's due December 15th and it was past that date, this has been repeated since 2019. It's an other non-compliance as well. Pages 233 for the first one, and then 234 and 35.
Yeah, and if Director Oster, if you could just speak to these briefly, that'd be great.
Sure, certainly, Madam Chair. There's a couple that are related. So number 8 and number 12 are both related to an account that the city had with Guadalupe Credit Union. So the two issues there were that the credit union was not able to provide documentation that they were meeting the statutory pledged collateral requirement. And then the number 12 was related to the authorized signers on that account not being current, not being up to date. So I am pleased to report that by working with the team at Guadalupe Credit Union, city staff has been able to close that account as of Friday and move the money that was in that account to the city's fiscal agent bank, Wells Fargo. So those two issues, I hope to resolve those two issues with the closure of that Guadalupe Credit Union account. So definitely want to recognize the efforts of the team at Guadalupe Credit Union in helping us accomplish that. And our corrective action is that we needed to
Right.
close that account and move the funds to the fiscal agent bank. So
And just to
Yes.
be clear, the statutory requirement, when you say that, that's state law is what you're referring to, is that state law requires that collateral, that the bank have sufficient collateral for the deposit that we have there. And that was a miss.
Madam Chair and councilors, that's correct. So for the amount that's above the amount that is insured through the FDIC, the statute, the state law requires the financial institution to maintain pledged collateral to protect the public essentially from bank failures. So the amount in this case was about $270,000. The FDIC insurance limit is $250,000. So there was about $20,000 over the FDIC limit that was subject to this pledged collateral requirement. The amount of pledged collateral that the credit union needed to provide us with documentation of was a little less than $10,000. And we weren't able to obtain that documentation. So as a corrective action, management made the recommendation to close this account and move the funds to the fiscal agent bank, which was completed as of last Friday.
Great. And 9 and 10 are budget issues.
Correct, Madam Chair. So 9 and 10 are budgetary compliance issues. Okay, so in terms of corrective action on finding number 9, so in this case, there were some timing differences between when expenditures were recorded and when the deadline was for making budget adjustments. So the State Department of Finance and Administration has a very early deadline. It's July 31st. That they require us to submit any budget adjustments for the previous fiscal year to them. Because we were behind on our audits and we didn't start working on the audit for FY23 until after that date, there were some of our accruals that did not get recognized prior to the deadline for making those budget adjustments with DFA. So those primarily affected the workers' comp and risk management fund. Those are expenditure accruals that we make based on an actuarial report that's prepared. And in the case of FY23, because we were behind on our audits, we were not able to make those adjustments prior to the deadline for adjusting the budget with DFA. In regards to the capital equipment reserve fund, that was also a timing difference related to when the city had the first auction last year. That was in mid-June. And the amount of expenditures over budget here are the auctioneer's fees. And we didn't receive that invoice until after the deadline for adjusting the budget with TFA. And as you know, the city had not done an auction like that in a number of years. And that was what led to that one. And then the last one with the large amount here was the Midtown College of Santa Fe Fund. And that was an adjustment related to depreciation expense, which was also recorded during the audit after the deadline for submitting budget adjustments to DFA. So I'm optimistic that being on the more typical schedule for audit for FY24 will help us identify these expenditures earlier and get them recorded in time to make budget adjustments if necessary.
As well as the new Questica software. Can you speak to
Yes.
that? And I know we've talked about that a little bit, both in your briefings with counselors and also this committee has talked about that. But again, I think it's worth repeating.
Good point. Thank you, Madam Chair. So we are also working on implementing a new budget software called Questica, which will allow us to do budget to actual reporting, which will help us catch these types of issues more quickly, and doing quarterly and monthly budget projection reports. And those are things that we plan to work with the Finance Committee to present to you on a regular basis.
Right. And so we'll be an extra pair of eyes on that. And I think also having to bring that budget to actual, which I'm very much looking forward to, will help us just stay on top of this. So
Absolutely, Madam Chair. And in regards to finding number 10, so this relates to primarily the timing of when we're recognizing federal receivables. So in some of these cases, we didn't recognize the receivable related to a particular expenditure in the same fiscal year. So this one, in order to correct this, we need to have more communication and coordination within the finance department between the grants team and the budget division regarding timing for when the federal and state grant receivables are going to be recognized in the finance department. The Questica software will help us with this as well because it will allow for more robust monitoring throughout the fiscal year, resulting in less need to make adjustments at the end of the fiscal year. Let's see. So the next finding, let's see, going to number 10, controls over vendor information. This relates to an issue that we've discussed as well in the past. So the issue was that we had a weakness in our process for updating vendor information in the Munis system, and a bad actor was able to exploit that resource, that weakness, and redirect a payment that was supposed to go to a valid city vendor to a bank account that didn't belong to that vendor. We have since implemented corrective measures. We have discontinued the practice of accepting vendor information changes via email. Now, the only way to update vendors' information is through the Munis vendor self-service module, and that is done by the vendor using a logged-in portal where they validate their identity using federal tax information, their federal tax identification number and their vendor number, which are reported to us on their W-9 form when they register as a vendor. So we've discontinued the practice that led to this weakness. And I also want to note that the city was able to work with our fiscal agent bank to recover 33,000 out of 35,000 that was affected by this bad actor incident. Madam Chair, we've already talked about number 12. So this was related to the authorized signers on the Guadalupe Credit Union account. As of last Friday, that account has been closed and the funds have been moved over to our fiscal agent bank with Wells Fargo. The last finding is related to non-compliance with the audit rule requirement regarding the timeline for submitting the audit. So we're all aware of that issue, and with the submission and release of this audit, I think we're in a good position to submit our FY24 audit by the state auditor's deadline. Madam Chair, those are all of the findings that are
great. And I'm
reported.
going to go back to the auditor to let him wrap up however he sees fit. I think you have a couple more slides here.
Madam Chair, members of the
one.
committee, I appreciate it very much. I thank you for your time. I do just want to point out, there's one other portion when we talk about findings and, you know, with the cities being late, right? So correcting findings takes time. So when you see something that repeats and repeats, it's because, well, normally in a normal cycle, you're 6 months before you're submitted, then it's, you know, normally January or February. So you got a 6-7 month time frame. And of course, these items that have corrected or you know, carried over from year to year because of the timing themselves. But I did want to point out from the corrected findings themselves, right? So every year they've been going down because something changes and you've been working through these processes. So these were the list of findings that were resolved from the 2022 audit. So finding number 3, which was a controls over journal entries, was resolved. Controls over payroll. That was the widespread issue. Obviously, that one there was tweaked a little bit because it's very specific to the airport improvement program. But that one's been resolved in its form. There was a non-payroll allowable cost related to the airport improvement program that was resolved. reporting from hazard mitigation, that was resolved. Controls over AP, that was resolved. Emergency procurement was resolved. Capital assets was resolved, and this wage rate clauses was also resolved. So that is 2, 3, 4, 5, 6, 8 findings were resolved in the current year. So we always have to look at the progress that is made. There were some new findings in the current year. It's pretty common, but we do like to mention what was resolved, and those are also listed in the report themselves.
So I think I'm glad we spent the time to go over the management responses, but I just want to reiterate, and I want you to confirm. So overall, the audit on the financial statements is unmodified. That's the highest opinion that can be given. That does represent a clean audit.
Yes, ma'am.
And generally, I mean, to have findings is not unusual.
Correct. Yes. So it was Madam Chair, members of the committee, it was a unmodified opinion, which is termed clean audit opinion, right? So it was a clean audit opinion as it relates to the financial statement audit themselves. It's not unusual to have findings. I look at what I find more important is look at severity of findings versus volume. That's my personal opinion. Yeah, right. Every finding matters, but I look at severity and then the decrease in those over that time frame. On any of those. When we talk about the airport improvement program, that was a qualified opinion over the questionable cost or the question cost on that one. And the other 2 programs were unmodified. So unmodified opinions over 2 programs, unmodified opinion over the financial statements, and then a qualification on airport improvement.
Okay, and I just want to note that in FY21, since we've done 3 audits in less than a year, right?
Submitted 3 audits, I think 11 months, right?
I bet Director Oster knows down to the second minute.
They were pretty close. I think it was about 11 and a half months or 11 months.
All right, so that's pretty unprecedented.
And it was actually 10 and a half months from submission date to submission date.
Okay, so I mean, that's and that's pretty extraordinary, right? In your
To be doing that much work in that short of time frame, yes, it's a lot of work to be done in that time frame. I'll let Emily speak for the city, but I know on our team, it's a constant, it's been a constant thing for a while.
yeah, and I guess thank you for being the team, for the teamwork, for the dedication to getting this done. I think this is very important for the city, and appreciate your help in moving this through.
No, we appreciate your support very much.
Director Oster, I don't know if you wanted to add to that. I have a couple other points I want to make, but
Certainly, Madam Chair. Yes, absolutely. I would like to chime in on that and just give a bunch of thank yous because really, I second what AJ said. This is a lot of work to complete in a short amount of time. And it represents getting to where we are today represents hundreds of hours of work by hundreds of people. Both our auditors at Carr Riggs Ingram, our consultants at Clifton Larson Allen, I'm going to say at least 100 city staff, more than that, the entire finance department, city staff throughout all departments. I want to specifically thank Matt Bonifer, our accounting officer, who came in at the beginning of January and just took charge of this FY23 audit and really got it across the finish line. He worked very closely with Carr Riggs and with their team to quarterback the audit and serve as the audit coordinator, which is a critical role. So I really can't thank Matt enough. We also have a number of other essential personnel, our controller, Josie Bolden, who came in July and also, helped us get FY22 audit over the finish line, played an instrumental role in getting FY23 audit over the finish line. Those are just 2 of, like I said, at least 100 city staff that have worked tirelessly to get these audits completed and caught up. So I really want to acknowledge their efforts and thank our city team, Carr Riggs and Clifton Larson Allen for all working together to get 3 audits done in the amount of time that it typically would take to complete 1. On AJ's point relating to findings, so because we were working on such a compressed schedule, we really didn't have a lot of time to work on corrective action in between these audits because we were essentially continuously under audit for over a year. So I do think it's really important to note that we did make progress on resolving findings, even though there wasn't a lot of time to work on corrective action. We started off in FY 21 with 22 findings. For FY 22, we had 17 findings. And then for FY 23, we had 13 findings. That's a net decrease of 9 overall between FY 21 and FY 23, which all 3 of those audits were completed in about a 1-year period. So to me, that reflects really good progress, and I am proud of that. And Madam Chair, I did want to reiterate that the audit report is in PrimeGov for both the governing body and also members of the public. And CarRigs, AJ will be back, as well as Eric Sperlin from CarRigs on Wednesday night at governing body to review the presentation in detail again.
Great, and thank you. I did for going over the findings, because that was kind of where I was going, is that we've done 3 audits. You all have done 3 audits in 10 months, and the progress in the findings is there. And so thank you for going over that. And just, I think to reiterate, we have in FY 23, we have 9 repeated findings from FY 22, 8 from FY 22 were resolved in FY 23. And then, of course, we have the handful of new ones, 4 new ones, 3 for airport and 1 on the vendor information. So again, continuing to improve, identify things that need strengthening. And I think you said it, and maybe you could just speak briefly to this. I mean, a lot of these things at the heart of this is the Munis functionality. And that in the 10-year that you've been here, which is very short, that Munis upgrade was absolutely critical to the progress that we've made, and continuing to build out these modules will help us to get on track with the rest of these problems. And maybe you could just speak to that briefly, because I think, this goes to some problems that the city has had for many years, and the work to get us modernized and professionalized is not a quick thing. You don't snap your fingers and have it happen. It's something that has to be worked on for quite a while before it shows results. And I think under your leadership, we're getting there. And maybe just speak to the Munis, how important the Munis is, because that's sort of the underlying factor here that's making a huge difference.
Thank you, Madam Chair, and thank you, members of the committee. That is absolutely exceptionally important point. So during FY 23, the city upgraded from the 2011 version to the 2019 version of Munis, and we're preparing for another upgrade this summer to go to the 2021 version. And in order for us to be successful and to resolve these findings, we have to continue to implement additional functionality in Munis, to learn how to use it, to leverage the technology, and to stay current on our versions, so we have access to the most current and the most up-to-date tools. The Munis manufacturer, Tyler Technologies, requires that users of their software upgrade every 15 months. And that's essential. We have to stay current in order for the system to function the way it needs to. And we have to continue to implement additional functionality. So some of that functionality that we're working on implementing now is the project ledger, the grants master, that functionality, which will help us prepare a timely and accurate CFA, the treasury module, which will help us automate our bank reconciliation processes, the capital assets, inventory, and work orders functionality, which will help us keep track of our capital assets and ensure that we're depreciating them, maintain accurate year-end inventory, track items that are kept in inventory and then utilized. An example of that is our fleet, which is part of finance, the department that I head up. We have items that are tracked as part of our inventory that are installed in city vehicles. For example, if a vehicle needs a new engine, we have to make sure that our records accurately reflect that the engine is no longer in our inventory. It's been placed into service by being put into a vehicle. So, Madam Chair, it is absolutely critical that we continue to upgrade our Munis system. An example of a functionality that was not available in 2011, but is available in the 2019 version is that vendor self-service functionality that I mentioned. That ability to have that control over our vendor information that allows that logged in access by vendors using identity validation to update their information. That wasn't available in the 2011 version, but when we upgraded to 2019, it became available and we implemented it, and then we became mandatory.
Yeah, thank you. And so I didn't know that Tyler recommended upgrading every 15 months. I mean, certainly we had not upgraded as a city in quite some time. That's part of what has led to this kind of this hole that we're in. Maybe speak to that just briefly.
Madam Chair and members of the Finance Committee, some of that predates my tenure with the city, so
Yeah.
I'll tell you what I understand. The city purchased the Munis software, and then it took several years for the steps to be in place to get it implemented. So by the time it was implemented, we were several versions behind. And then it took a little bit longer to get to a place where we were ready to upgrade. Now that we've upgraded to a more current version, to the 2019 version, as I said, we're planning another upgrade to get to the 2021 version. And right away, we'll start looking to another upgrade to get to the 2023 version. And that's the way that these softwares work. They're constantly releasing upgrades, additional functionality, service packs. The different vendors call them different things, but these softwares are not static. They require maintenance and updates, and it's absolutely essential that we stay on top of that as we move forward.
Yeah, just sort of like the software that we all use personally, and it's always being upgraded, so always make improvements. Mr. Bowers, did you have anything else to add to your presentation?
Madam Chair, members of the committee, no, ma'am.
Okay. Comments, questions from the committee, other thoughts? Yes, Councilor Garcia.
Thank you, Madam Chair. And thank you for the presentation. Very informative. And I think the biggest thing that I have in regards to question or verification. So the majority of our material weaknesses, it shows, I like to take a look at corrective timeline. And it looks like the majority of them you have December of 2024. There is the one, I think that our schedule of expenditures of federal awards that shows June 30th, 25. So that's an extra year. We're pretty confident we're gonna kind of get to that point. I mean, I know that a big part of that is our grants manager, and maybe you can update us where we're at with that, please.
Sure. Thank you, Councilor Garcia. So as far as the 4 material weakness findings that are not related to federal compliance, for the first one, which is the controls over the schedule of expenditures of federal awards, we have the timeline on that one as June 30th of 2025. The primary reason for that is because we're implementing additional functionality in Munis. We also do want to get that grants manager position filled so that that person can participate in the training and in the configuration and implementation of that functionality. For internal controls over financial close and reporting, we had put an estimated completion date as June 30th of 2024. We feel that we've made significant progress on this, including getting caught up on our audits during FY24. So we're optimistic that when AJ and his team come back in and look again at our year-end and our month-end close processes for FY24, that they'll see improvement there. Then as far as controls over cash balances, that one we have June 30th of 2025. The reason for that again is that it's implementing additional functionality in the Munis system, and that takes time. So that's going to be a pretty significant time commitment for us to get it set up, primarily for the finance department. But then it's an example of a way that we can work smarter, not harder. It's automating a lot of things that we're already doing manually, and it will help us reduce reliance on our consultant because it'll automate some of the work that they're currently helping us do. So that is a little bit bigger lift though in terms of the IT implementation, which is why we put that at the end of FY25.
Thank you. And I think going just back to the comments that were made in regards to continuously working on the last 3 audits. And so I look forward to kind of keeping tabs on where we are in regards to a lot of these now new corrective actions and where we're going to be at in the next 6 months to a year. And getting to the point where we could get completely on track with the next audit, which is due in December. So other than that, I have no more questions, Madam Chair. Thank you.
Thank you, Counselor. Any other? Great. Thank you, Mr. Bowers, for your patience tonight and for being here with us in person. Very nice to see you in person, and thank you for the work on this. But very excited to be current and look forward to being on time in December, as Counselor Garcia notes. So,
Madam Chair, members of the committee, thank you for having me tonight. Always my pleasure.
and thank you, Director Oster, for just amazing leadership and work of your team and yourself and the work that you've been doing across the city. Because as you note, this is not just about you. It's not just about your team. It really is everybody across the city rowing together to accomplish this. So congratulations really to all the city staff that has made this possible, and really appreciate that. And also, they're not here tonight, but our CLA, our consultant, also, we could not have done this 3 audits in 10 months, 11 months without their help as well. So it's really been a full court press, and appreciate all the efforts. Thank you.
Thank you, Madam Chair.
Okay, I think we are, let's see, where are we? Matters from staff. Director Oster, did you have more for us tonight?
Madam Chair, I do not.
Okay, matters from the committee. All right, no matters. Matters from the chair. Our next meeting, Monday, June 24th, 2024. And I just would note that we will do this audit presentation again Wednesday night with the full governing body. And with that, we're adjourned. Thank you, everyone.